Good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Guard Capital. It is Tuesday, June 4th, 2024. Glad to be with you this morning, every morning, 9 a.m. Eastern Standard Time here on our YouTube channel. Let's go ahead and rock and roll. Just make sure, don't forget to subscribe and like our videos, turn on notifications so you don't miss anything. Let's get to it. Dow futures are down 83 points, but off their lows. NASDAQ is bouncing this morning off their lows as well. 18,607, 5281 on the S&P. That's down about 16 points. The NASDAQ, the Russell is down about 0.84%. That took a little bit more of a hit overnight. The dollar index is bouncing, 104.28 currently. The VIX is up 4.2%. Again, still very, very, very depressed at 1366. Crude oil, yes, the bane of my existence, 72.81. It was just a short while ago. Last week, we were at $80 a barrel. So what do you think happened to energy stocks? They got creamed. Thanks, OPEC, for nothing. Let's see if anything changes with the dollar. Maybe that'll boost oil prices, but I highly doubt it. Looks like it's more of a demand thing than anything else. Let's go ahead and take a look at it together. Crude oil on a bigger time frame, if we go to the daily, it really is just kind of choppy within range. And that's commodities for you, as this is absolutely slow. Okay, not loading. Let's see it. So again, you could see this green level, trend line break. Can we get down to 70 is the question. That's really it. When do we see ourselves bouncing on crude oil? And again, this is a benefit for consumers because gas prices are going to be lower ahead of the heavy driving season. Imagine that. Below the 200-week MA on crude oil, not the best, but it is volatile. We do have inventories tomorrow. We have some JOLTS job numbers today at 10. That could affect it. So, yeah, not ideal as someone who trades oil and someone who trades the energy stocks. It sucks. And we just have to wait and see because it's still for June 21 expiry. Gasoline is down 1%. Gold is down 0.60%, 23.55 an ounce. $30.08 for silver futures, 2.32%. Copper's down 2.22%. That means FCX is down pre-market. That was a 30% profit at one point on May 17th. Boy, do I wish I closed that. Bitcoin futures, 69,485, 37.90 on Ethereum. So a little bit of a pullback in crypto. In terms of the Forex world, dollar yen down 91 pips. 155.20, 108.65, up 38, down 38 pips, excuse me, for the euro dollar. I know I had a question here regarding SMCI. So my apologies. I think Thinkorswim is having some issues, some technical issues. So you can see that it's been really, really slow, at least for now. Let's go to the daily on SMCI and see what we're getting. All right. So we're below the 100 MA on the daily. Not great. You have a support here on 700. Depending on what you're trying to do, normal, at this very moment, doesn't look like there's much edge at the moment. If anything, you're probably looking to stay short, if anything. In terms of buying any kind of dips, well, again, 700 would be a good place to start if that's where you're looking for. But as of right now, that's going to have to be the level you're using. You can use that 100 MA, 100-day moving average, the blue line here, as your resistance if you're short. So you use 817 as your kind of your R or resistance and a 700 stop, a 700 target. Now, we are down pre-market. So again, 759, you're more around this area here. Again, we're getting closer to continuing down to 702 on SMCI. This is probably why IWM Russell's down. Good morning, Lulu. Earnings play. Yeah, it's the same setup that we had on Starbucks and Target, Intel. And you could see that gap to fill is right around here. This one gap. That's right around 321. It's at 305.96. You're gonna have to get above 313 or 315 for you or anyone to play that gap fill. And there's plenty more up there at Lululemon. But as of right now, I checked yesterday, there wasn't a ton of volume, to be quite honest. Tesla calls. I think it's playing for the gap fill. Let's see. And of course, you do have earnings this week. But again, I'd wait for those earnings. We waited for Starbucks. We waited for Target. And we made money on both post earnings. We just had the news come out regarding their China deliveries. That was down. You can see that we're below the 20-day now based on the current price. But guys, it's just crap chop since May. You've been around 186. to around 168. Not exactly sexy, not exactly enticing to do anything. So until you get above 186.98, I know, boring. That's really what you have to wait for on Tesla. There's just nothing to do there. SPY and Apple options. Excuse me. Apple is trading at 194. I went long yesterday. We're breaking for 195. I expect us to get to around the 198 to 199 level. That'll be the next R. If we break out of it, cool. But if we don't, that's fine because all we're doing is targeting here. I do expect Apple to move higher. Again, even with the NASDAQ down, Apple's flat. It's only down 4 cents pre-market. So seeing some relative strength. We had some strength yesterday. We tagged the highs yesterday at the open of right around 194.99. Once you break 195, we should be able to get to around the 197, 197.50. We do have a JOLTS number today. That's job openings. That might affect Apple. That's at 10 a.m. So just be wary. We'll see what we get. But again, I am bullish on Apple. My target short term is 200. SPY. SPY, again, personally, I'd rather just trade futures when it comes to S&P. You don't have to worry about time decay and none of that jazz and demand. Looking at SPY here, nothing. Not a whole lot here. We pulled back, obviously. 526, we're down about $1.80. Really just got to stay above the 20 at 525.25. This is a really bullish candle anyways. So again, we're looking at a bounce here at 525.25. That's it. That's going to be your support. That's about $1 off. Thoughts on AMD calls? AMD, what a shame. There was some news on Intel as well, some AI news in terms of their chips. Again, down again. This is what AMD is doing. Nothing. That's it. It's just been chopping, and I hate it. I absolutely hate it. This is exactly where we've been really since the 16th of May. This is I can't do anything with this. We got to break out or we got to break down in options. If this was futures, completely different story. You could make thousands of dollars trading 10 cents. But in terms of options, guys, again, one hand behind your back here. You can't do much. In terms of AMD here, it's just chop until we get some kind of momentum. And we've been here before with AMD. You're talking about over a month of just staying between 184 and 165, about a $20 range with no moves until finally in March we soared. So are we setting up for a consolidation push higher? Possibly. But as of right now, we're just in Chop Town, just hating life at this point. Let's see. You're welcome, Nirmal. What do you think about Home Depot calls? Home Depot is a really good trade, and I hate to say this, during hurricane season. When you have hurricanes coming, Home Depot tends to move higher. It's really horrible to trade things like that, but I've done it before. As a Floridian, you're used to hurricanes. 314.91. That's my support level there. We are below the 200 day. That's concerning on Home Depot. So the question is, what are you looking for here? We're looking for a trade. Then we want to get to 315. If you're looking for a dip buy, probably the same level too. In terms of the trade, what are you looking for, time wise? But if you're buying the stock and just holding, I think you can get to 315 and get a little more. Retail is kind of hurting. Certain pockets are doing well, but Home Depot pulling back. Even with this spring, with the spring clean of their homes and do some home improvement, has not translated to Home Depot. Right now, it's at 328.01. It's green this morning, based on the spread. So if you get above 335, that would be a great start because there is some gaps to fill above. But 315 would be a good start on Home Depot if you were looking to buy. Intel. Intel had some news. They're up this morning, which is good. Regarding some new chips, they threw the magic two letters AI. Got to get above 31. That's the deal. I got to get above 31 ASAP. I got some time on this here. And again, it's very similar to Target. It's very similar to Starbucks where we played the gap down from earnings to see if we can get that gap fill. We got pretty close and then we rolled over. So we're getting to where we need to go at least. Above 31 would be a great start today, but need the NASDAQ to push a little higher to kind of support that. But it is outperforming at least this morning pre-market. Let's take a look at Meta. Meta, I need 485. If you get above 485, then yeah, you can do the 550s, 525s, but we're just not quite there yet on Meta. Thoughts on Mexico and India's market moves? Apparently, Having a female president is bearish. Correlation does not mean causation, guys. There was 2 women running for president. The market doesn't care. What the market doesn't like is change. That's the biggest thing. Stock market likes the status quo. Any kind of change, what happens? You sell. You don't need a reason to sell, but you always need a reason to buy. Remember that. And algos and people get panicky over things that they get nervous about. I'll give you an example. Donald Trump won in 2016. Everyone thought the world would end. Stocks limit down, dollar yen limit down the day of. And what happened? Stocks bounced. It's just we don't like change. People don't like that change. Same thing as the stock market. It's any kind of change gets people nervous. India, they're so used to that Modi gentleman having the party having the majority. The elections were a little tighter than expected. Oh boy. Again, politically in India, I have no idea. Politics in general, again, it's so fickle. People are so different. People have different perspectives. God bless y'all. But it has really not much to do with the stock market, guys. The presidents and politics and all that, it's window dressing. Bottom line, stocks go up regardless who's president. It could be Elmo if you want. It doesn't matter. It really doesn't. Short term, yes, you'll have some little moves here and there. But guys, not everyone's trading same day. Okay. Not everyone has weekly options. There's people who have pensions, 401ks, mutual funds. Those are the ones that really run the market. You and I here online, yeah, we're dropping the bucket, let's just say, in terms of speculation. Trillions of dollars are changing hands every day in the Globex futures platform and the NYSE. And you're talking about, a couple of points here and there. Yeah, it's weird moves, but that happens throughout any kind of change. Does anyone remember Brexit? Yeah, when the British left the EU, that was a big deal and the markets moved. And eventually what happens? It bottoms out just like anything else. So I wouldn't put too much emphasis on, well, if this person wins the election, then my life will get better. Or if this person wins the election, stocks are going to go up. It doesn't work like that. It doesn't. You're going to vote for who you want, regardless if the stock market goes up or down. Let's be quite honest. That's just all. So I wouldn't put too much emphasis on it. More emphasis on the charting, more emphasis on the macro, not the politics. That's a waste of time. You only get one vote regardless, guys. Cisco. Let's see it. Cisco, anything good here? Got a gap to fill at 55.44. Got possibly a little bit of support right around 45.23. Listen, Cisco is a good company, but it's kind of hard to attract funds if you're this stock when you have Nvidia out there and you have all these other major growing mega cap stocks. Cisco is old news. Let's be real. Now, again, I'm not, saying that, oh, you should never own the stock. Sure, you can own it for the dividend, but guys, it's been dead money since really when? The dot-com bubble? Not much going on there. So I think you're better served by looking at other names because Cisco, in terms of networking and all that, I mean, kind of capped in terms of growth. I don't even consider this a growth name anymore. It's just chopped. Think of it this way as Johnson & Johnson. Johnson & Johnson, you're not getting much, guys. Got great balance sheet, got a dividend, but that's where the interest ends. And I imagine most people here are looking for that growth, and I get that. Nike was part of my watch list of the week, interesting enough. Let's take a look. See this upward trend line here, still holding. If you break below 90, 66, 80, shoot, you can get a share price for the same cost as a pair of Air Force Ones. So maybe Nike could throw in a share of stock in every box. That'd be nice. But yeah, this is right now, again, still looking like a breakdown, kind of similar to crude oil, what we talked about, that trend line. But this is this is a pullback, like in terms of time frame. You're talking about since 10 years. And this is a 10-year trend line and it's breaking. So obviously Nike is telling us something. People are over sneakers, I guess. I don't know. Maybe finally people are over the sneakers app. I get it. But it looks like it's going to break down. We just need 90. Spotify. I actually looked at that this morning. SPOT. Good old Spotify. I love Spotify too. In terms of the actual platform, the music's the best. Okay, so we need to find some kind of way to trade this in terms of volume, right? We need volume first, but it is setting up to breakout team. I think once you get above 315, it's pretty much off to the races there. So it is setting up for more upside. I mean, it's a breakout on the weekly. I mean, you name it. Spotify is actually raising prices on their premium service as well. So that's why you're getting a little bit of a jolt in terms of the price action. You can see it was announced on Monday, got a gap up. So Spotify looking really, really good, actually. Thoughts on the banks and the $580 billion in realized losses? It's unrealized losses, and that's regarding the bond market. I remember about a year and a half ago, maybe with Masterclass, we shorted Deutsche Bank, DB. Deutsche Bank have trillions of dollars. Yeah, trillions with a T in derivatives. And again, unrealized losses as well. That's just how it works with banks. Of course, they have unrealized losses. They also have unrealized cash. Just because they have cash in their vault doesn't mean it's theirs. Remember, that's customer cash, that's institution cash. Listen, is it a good thing to have $580 billion in unrealized losses? It's not a great thing. But what happens when bond yields go down, as we expect? Those bond prices go higher. So are we going to use that unrealized losses or unrealized gains when that comes back? Are we going to throw that on the balance sheet? Are we going to throw that on the earnings call? Who knows? Let's see. I got to find the yields. Where was the yields? CGI. CGI. I'm missing the letter. There you go. So those unrealized losses are really based on the bonds that they hold. And, American bonds, government bonds are pretty much as liquid and as gold as you can get, gold for lack of a better word. Guaranteed by the government, which prints money. So you would assume you'll get it paid out. But again, the unrealized losses are paper losses. Now, if it's realized losses, that means they're already booked, and we're going to see that in the next quarter in terms of their earnings. I'm not sure if that's the case. The assumption is, and I read the headline, I did not read the article. I read unrealized losses. So maybe I read something wrong, Austin. But in terms of my thoughts on there, bottom line, guys, when it comes to banking, it's simple. Banking is all about trust. Do you have trust in the institution? How do you build trust in the institution? Balance sheet, management, so on and so on. And what happens with banks when times are not good or times pull back or bonds, you name any kind of issue in the market? They get bought out, they get absorbed, and it's going to be more consolidation, guys. We already know since 2008 what the American government is willing to do to protect the banks. We know. We saw what happened with the Silicon Valley banks. The US will make sure, especially in an election year, right? I guess we want to use that narrative or what have you. We're going to make sure that any bank has what they need. Again, it's not easy to become a bank. More than likely, one of the big ones will just buy them out and they'll just merge and acquire. That's it. So, any of those headlines, guys, there's always something bad happening. It's never going to be perfect. It just doesn't work that way. And what does the market do? It just adjusts. That's what the best traders do. They adjust to what happens. This idea of a perfect scenario. Oh, if the banks fix this, then everything will be easier. You make your opportunities, you make what's out there. So, that's how you should look at the prism of things. Not, will things improve? No, will I improve? Because if you're better, you can trade in any environment. It don't matter up, down, left, right, side to side. Good time to get more shares of Amazon. Last week, we did use the puts on that. Bounce off the 100. Not terrible. Not a terrible place, but maybe the greedy me wants to get to 160 on Amazon because that's a gap fill I want to fill from earnings in February. If we can get there, I think that would be a good place to go ahead and add some shares. Or you can just dollar cost average. Amazon's great to hold long term. All right, team. We'll go and leave it there. Have a great rest of your morning, and I will see you tomorrow for the next morning note. Thanks for watching. I'll see you then. Cheers all.